Hey everyone, welcome back to Corporate Decoder. Today we are looking into Commerce Bank shares, and let me tell you, their latest report is like a magician pulling rabbits out of a hat. I mean, who expects a bank to talk about accumulated other comprehensive income? Sounds like something from a sci-fi movie, but stick with me, we'll decode it all and find out what it really means for your money. Alright, so what's the headline? Commerce Bank shares just dropped its financial report for the first 3 months of 2025, and it's a mixed bag. They made a solid profit, but there are some strange things happening under the surface that we need to talk about. And before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Alright, let's get to it. The most important parts of this whole filing are their financials, so let's dig in there. So looking at their balance sheets, we can see how much the bank owns versus how much it owes. Their total assets grew a little bit to $32.4 billion. That's good, means they are growing, but not too fast to get out of control. Liabilities are at $28.9 billion. It's important to keep an eye on this because it tells us how much they owe to others. If liabilities grow faster than assets, that could spell trouble. Looking at the good side, their total equity is around $3.5 billion. It's grown, which means they're doing well. Alright, after the balance sheet, we have the income statement. This tells how much money the company made and how much it spent. Their net interest income is a good number to look at. It is $2,069 ionas for the quarter. That's how much money the bank made from loans and investments minus the cost of paying interest on deposits and other debts. A good net interest income means they are making smart lending decisions. Next, total non-interest income is at $158.9 million. This includes fees from things like trust services, bank card transactions, and deposit accounts. The cash flow statement shows where the company's cash came from and where it went. The company had positive cash flow from operating activities at $138.6 million. It says that the core business is healthy and generating cash. However, investing activities used cash of $307, but it says that those invest me $3 at $492.70. Finally, financing activities provided cash of $132 dollars meant have to pay off long term to justify the spending. All finally financing activities provided cash of $132, and all of this in balance by a thread. Let's dig a little deeper into the loan portfolio, which is core to their business. The total loans amount to around $17.4 billion. So what kinds of loans are they handing out? And this is a critical question to know if the money coming back. Most of this portfolio consists of $6.2 billion in commercial business loans and $3.6 billion on business real estate. That makes up most of the pie, meaning that Commerce Bank Shares is a commercial lender at its core. We also need to check if their money is safe. Allowance for credit losses on loans is $167 million. It's grown, showing an increasing concern that they won't get some money back. But as a percentage of all loans is around 1%, so we can say they are pretty secure still. A bit concerning is that they have $22.6 billion in non-accrual loans. Those are loans where the bank isn't really expecting to get paid back on time or at all. Those are a risk, and we need to watch out for it. They highlight key assumptions such as economic forecast. For example, the unemployment rate is expected to stay low and the economy will continue to grow. This can help you form an opinion on how aggressive the company might be getting into the future. These numbers help management with the allowance for credit loss estimates. Now, let's talk about what happens when the bank can't collect on its loans. The provision for credit losses was $15.1 million, which is the amount they set aside to cover potential losses. This is more than what they charged off, meaning they are planning for a potentially troubled future. Commerce Bank Shares also invests a ton of money. It is around $9.6 billion in a variety of securities. Most of their money, $9.3 billion, is in what are called available for sale debt securities. It's a fairly safe bet. What's important to know is that if these bonds do badly, it can hit profits. There is a section about goodwill and other assets, but there is really not much to report. No changes. It's what you would expect. I'll scroll.